Hey, greetings. Dr. Jeffrey Scott here. This is my weekend market update. Newsflash, it's Friday, not Sunday. Typically, I don't do these until late in the weekend, but I'm using a new tool called the Market MRI Pro that actually updates at 4:30, so I don't have to wait and do updates later. So I can do my video right after or before dinner. I titled this week's video, "The Trump Bump Takes the SPY to All-Time High." And it did, and we'll take a look at that. Friday was kind of a yawner in the markets, but we had a really strong week, and we'll take a look at what's working, what's not working. That's me in the lower left-hand corner. I'm still actively in the healthcare field. I have a healthcare technology company. There I am at a value-based care meeting giving a presentation. And yes, I look a lot older than I do in my YouTube picture, which I should update someday. My email address, hdsidoc@gmail.com. Disclaimer, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools in multiple platforms, but am an independent trader. Speaking of platforms, I'm starting to work out on a grid. I have tools in Wealth Charts, TradeStation, Thinkorswim. I've got some of the tools, but there's nothing I market there. Trading and TradingView. HGSI is where a lot of these tools were developed. Some of the things I've developed beyond that. Metastock and Market MRI Pro. And so what I do, I'm going to talk in a minute about my upcoming educational program Saturday this week, 9 to 12 in the morning Eastern Time. And I'm going to use all these programs, show you some of the strengths of each of them. There's not a lot of weaknesses. You'll notice there's not a lot of red on this chart, but there's differences, and we'll take a look at that. Tools work the same in every program. I am independent, and I use them all. I have a Google group. This is probably the best way to keep in touch with me. It's totally free. All right. You go to Google Groups, you put in your Gmail account and look for Top Down Trader, and then they'll assign you to my group, and I'll let you in, and then you'll get a nightly video of what I think the market is doing, invites to live meetings like the one I'm doing Saturday morning, and there is now becoming increasing exchange between me and among the participants. Love to have you join. Again, no cost, and it's really not for solicitation. The live event, I was originally going to limit it to the YouTube, to the Top Down Trader group, but I decided to open it up. There's still some space available, no cost. You don't have to own my tools, although this is really taking the place of the quarterly market MRI education that I did as part of my Wealth Charts commitment. So we'll be looking at Wealth Charts among other programs. The topic will be is how I approach markets from a top-down perspective. Why? What tools do I use? How do I identify high-value trading opportunities, and how do I trade them? We'll utilize multiple tools, including the Market MRI app, and I'll have a link in the below the YouTube video into the remarks section for you to register. If you like these, I do it daily when I'm not traveling on stocksanddocs.com, typically 10 to 13 minutes, and using Wealth Charts. I know a lot of people love that platform, as do I, and it's an opportunity to show how I use my tools there. And the other thing is, let's get going. So let's look at TradeStation first, because some things I like about looking at the charts there. I have a friend in the business. His name is Sagar Nandi. He has a company called SuperiorProfit.co is the website. He's got some great tools. Most of them are named Q something. And one of my favorite parts is how he does trend lines, which is his Q memory tool. So in these charts, the yellow is the 50, the red is the 200. But we won't talk much today about these green and the blues. But the other lines here, the straight lines, are trend lines. So let's look at daily charts of the major indices, and you can just get a sense of what I talked about. Breakout several bars ago, a run up on the spiders, and a sort of a a minimally down session, down 0.36 after a big run. When we look at the Qs, you see the same thing in sideways the last couple of days. Similar on the diamonds. The big difference is the Russell's failing at the 50. It's 4 times it has not broken through. If we look at the volatility, it's come down. It's now in an area that, as my deceased buddy, may rest in peace, George Lee used to say, when the VIX is high, it's time to buy. When the VIX is low, look out below, meaning markets have a tendency to go down when the volatility is low, because it can only go one way, it can go higher. And when the volatility is high, it's probably going to reverse and go lower when the markets go up. Over here, you could see the dollar. Trump has not been great for the dollar, but it's been good for the markets. And you could see the dollar bounced on this support line here. This has been support for a while. It actually broke down. So that's probably part of why we're seeing the gains in the U.S. markets. If we look at some of the commodities, you can see a little bit of a shooting star on gold. It, like the markets, broke out of the resistance, ran up. Not so much on silver, kind of a sideways move after taking out the 50. Oil, ever since we got into the inauguration and before with the drill, baby drill, you could see oil has come down. Natural gas, which had broken out after a multi period of continued failures at that 200-day moving average, broke out, retested, and has continued to go higher, working up an uptrend here. I wonder with the drill, baby drill, which may produce a lot of extra natural gas, whether that will continue. Only time will tell. And then if you look at the 10-year and the 30-year, you could see they were down both on the markets on Friday. But if I go in here and I make that a weekly chart, you could see probably up a tad on both the 10 and the 30 on the week. So markets have been strong. Again, a little bit of a yawning session in the markets on Friday. Now this is the Market MRI Pro app developed by Praveen, who also did my TradingView indicator package. And I just want to show you how I can really consolidate my night review quickly and early. So let's just start with the timing model. So the timing model looks at 4 ETFs. Upper left will be the Spider, upper right will be the Qs, lower left will be the Russell, lower right will be the Diamonds, and it's loaded up here. These are weekly charts, and I have a couple of components that I use in the timing model. These dots represent whether you're in a buy or a sell, and what I really liked about this model is it went into a buy the second week in November, and it stayed in a buy up until the last 3 weeks when we had this choppiness. Now, it looks to me like it's getting ready to come out of that, but we'll see. So the SPY has gone into a weekly sell. The Qs are still in a weekly buy, even with the choppiness that we've had. And then the Russell and the Diamonds of the Russell are also in a sell. So the longer term signals are bearish. Now, that might make me upset and concerned, but it's interesting, just as the longer term signals were turning bearish. If we look at the daily, you'll see the dailies were turning around. So, when the long term is down and the short term is up, it's kind of a retracement in a downtrend until you break out and go higher highs. So I still think that's what's going to come, and therefore I'm not short this market, and I've been enjoying the recent run. And I think the strength has been impressive. You could see the daily Spider is green, the daily Qs are green, the daily Diamonds, and the daily Russell. So on the short term, we are long, and you could see here, this is a 3-month high-low, and you could see that we are getting at an area where we are a little bit overbought, not so much on the Qs, and sometimes this will be enough to cause a hesitation or a slight pullback. So mixed market, certainly not telling you to short the world. Maybe it's time, but I'm not ready yet. My guess is we go higher still, especially if you get some dovish talk from the new president on tariffs compared to where he was before the election, and also pressure on the Fed to lower rates, which I don't know how that will be viewed. I reproduced those index and commodities charts here, but I don't think there's reason to look at them again. Let's look at the daily briefing. The daily briefing was something that I wanted real time or updated minute by the minutes, that would give me a snapshot of what the market's doing from moment to moment. Now, I'm a swing trader to position trader. I'm not a day trader. I'm not a futures trader. So I only care about markets, indexes, sectors, and stocks. And I don't care about within the day. I care about daily, weekly charts. So if we look here and we look at one day close, we can see that the leadership in the market was the Russell, but everything was red. Russell and Diamonds down 0.28%, while the VIX was down 0.45, the Q's down 0.57, and the Spiders were down 0.29. So the top three basically behaved the same. You could see the change from the open, if you care, 5-day change here, very positive, except on the VIX, not a surprise, markets have been strong. And you could see that they closed in the bottom part of their closing range. So not a strong day and a close near the low of the days. If I want to look at NYSE and NASDAQ new high, new lows, this is the new highs minus new lows. These are the time frames you could see at the 4 time frames. They're still more new highs than new lows. And again, all this is updating for me during the day with its own unique independent data feed. If I look at 1-day change of the S&P sectors to get a sense of what was working, it was interesting that you saw rotation out of tech and growth, and you have utilities, communications still strong, staples, real estate. So staples, real estate, and utilities are those defensive plays. No surprise to see them leading in a down day. What was down on the day were tech, energy, and discretionary. And you could see over here, if you look at 5-day change, these were some of the strongest things, along with communications, where the things that were leading today were some of the weaker over the last 5 days. Again, you can look at closing range of winnings and losers, and down below you have my themes, and the themes are basically 40 or so different ETFs, and we're building in the capability to put your own ETFs. But you could see where the leadership was. It was in cannabis, China, China consumer, silver, e-commerce, social media. The weakness was in the tech, semiconductors, uranium, energy, aerospace, biotech, home construction, Internet of Things. It gives me a sense of what's working, what's not working on a real-time basis. The other thing I'd like to point out are these 3 boxes here, which represent the S&P 1500, the NASDAQ, and the NYSE, and that ask the questions in blue, green and blue, what percent of sectors were up, industry groups were up, stocks advancing in these different indexes, and then what percent of the stocks are above the midline or the Bollinger Bands. Above 50 is bullish, below 50 is more bearish. Around 50 is neutral. And you could see on the S&P 1500, 27% of the sectors were up. So that means most of the sectors were down, and we were over here yesterday, so a weaker day than Thursday. Industry groups, the same thing with 42% up, 48% of the stocks were up, and we still have 73% of the stocks above the midline of their Bollinger Bands. So intermediate term strength weakened a little bit today. NASDAQ, again, similar, 23% of the sectors up, 47% of the industry groups up, 48% of the stocks, and a little bit over half above the midline. Less bullish than the S&P 1500, but not bad. And then maybe as strong as the S&P as the NYSE, 50% of the sectors were up, 46% of the industry groups up, 50% of the stocks were up, and 70% were above the midline. Why is this important? Because when you see the indexes really high and these 3 things showing underneath deterioration in the sectors, industry groups, you can be pretty sure the market's coming down and vice versa. It also gives me a sense of what's leading. The S&P 1500 is great because it's balanced with 500 large cap, 400 mid cap, and 600 small cap. The NASDAQ has a lot of tech, and the NYSE has a lot of energy. So it gives me a sense here of what's working right now. The next thing I look at is called the buckets briefing. So imagine you have a stock in its Bollinger Bands. 90% of the time that stock's going to trade within the Bollinger Bands. Set 0 as the bottom of the Bollinger Band and 100 at the top, and divide 10 slices. And then ask if all the stocks in the NYSE, which slice are they in? In a bullish market, they're going to be up near the top of the Bollinger Bands. In a bearish market, they're going to be near the bottom. In an overbought market, we're going to start to be above the Bollinger Bands. And in an oversold, we're going to be below. Well, that's what you see here. Same here. You got NYSE, NASDAQ, S&P 1500, and the Russell 2000. The farthest one, which is bucket 11, and the first one, bucket 0, are below on the left and above the right. So when we pile up on either of those, it starts to give us a signal that we might be getting too far. Okay. Um, Hold on one second. I got to send a note to my programmer. One second. All right, so we could see here the NYSE, most of the stocks are sitting above the Bollinger Bands and very few above. Now, look at yesterday. We had stocks at 7% above. Not a big number. 25% is a big number. And that came down. We had very little below. NASDAQ is kind of a neutral pattern. It's not bullish. It's not bearish. S&P 1500, like the NYSE, shows a lot of strength above the midline, and the Russell 2000 is stronger than the Nasdaq, but not as strong as the 1500 or the NYSE. Just gives me a sense of where the markets are. When does this become useful? Oh my goodness! When we have 30% above, you know the market's coming down. When you have 30% below, you know the market's going up. That's why I do it. I look for turning points. I look to give me an edge when we can actually do something to make some good money in the market. I have a market breadth tool. It's already updated at 4:30. And very quickly on the left will be the NYSE. On the right is the NASDAQ, 50 and a 200-day moving average on the chart. And what you can see here is this is stocks above the 17, the 200, and the 50. And you could see when they got very negative, we bottomed. When it gets very high, we top. Well, we're moving up, but we're not there yet because the 200 and the 50 are lagging the 17. When they're all up there, you expect a reversal. Not as extended on the NASDAQ on the right. We have new high, new lows. We have advanced decliners, and we have up-down volume, and they're positive on each of these. You can see they're green on the marker. And then I have a series of unique breadth indicators from Ian Woodward and myself, and just to give me signals in the market. And we actually had one in the market on Friday called the Bango, which is a signal that we're buying everything. It's a signal of exuberance to the upside. And then lastly, to give me a sense of what's working in the market, and by the way, if I haven't said it before, it's a real-time data source, but we're pushing an update out every minute. We're doing all the number crunching on the server. And so you might be a minute delayed, but you're getting close to real-time data without having to have a separate data feed. What we have here, take out Bitcoin, the remaining 11 boxes represent a specific sector, but it's a ratio chart of that sector versus the spider. Why? I could have the markets up, I could have the markets down, but I'm going to probably have some sectors outperform the spiders and some under. Things that have been strong at any length of time are up here. You can see Bitcoin's been the leader. Discretionary's been okay. Things that have been weak, staples, utilities, real estate are on the bottom. Things in the middle are in the middle. So when I looked at this evening, I saw a couple things. Communications had a long white one, which means it's had some short-term strength. Staples might be showing something here with that white line, which is the last few hours it turned up, as did utilities and real estate. So are we seeing some rotation into the defensive plays? I could see that healthcare, maybe it's coming alive. And financials, they beat earnings, every one of them. I already showed you communications. And what really is negative here is technology and energy. Energy was on a hot run until drill baby drill became the mantra. All right, we're at 20 minutes. Now let's go into my layout. So this layout is basically set up for how I trade. It includes on the left the high-low jump, the bongos, 17 in green, 50 in white, and 200-day moving averages in red. Regular volume, my dot models, relative strength versus the spider, OBV, and then a relative ranking versus the other 9,000 instruments, which is right here, which I want to put a number at the end so you can see what the number is. So I'm a top-down guy, so I want to take this list. What is this list? I create a list that's the stocks in the NASDAQ and the stocks in the NYSE and the Amex, and then I filter them for $1 and 100,000 shares, and that's 3,500 stocks. And that's what I go fishing from. If I go to top-down, it's going to give me all of them in the various industries that they live in. So here are the 11 sectors, and I have them ranked here by percentage move, and communications comes up to the top. I have 140 or so industry groups, and I could rank them by percentage move, but I like to rank things differently. Let me get that to do the right thing. So I could do them by percentage move, but I developed my own momentum indicator, which is more than 1 day, but relatively short term, which is the FM2. So I have the short, intermediate, and long-term momentum indicators. So when I rank them as communication, real estate, financials, and staples. Now a top-down guy can do a lot of different things. I might just want to look at the top sector, and I could see the various stocks, 163 in the sector. Now I can do a couple of different things. I could rank them by the 2-day momentum and say, let's take the top 10. 1, 2, 3. And I can now right click, add it to hot list. And that's going to put it into my hot list. Okay. And I might go down the top 3 sectors and do that. Or I might come over here and say, all right, sectors are helpful. Let's take the top 5 industry groups. 1, 2, 3, 4, 5. And let's highlight all of them, and then let's add them to my hot list. And so what I've done in a true top-down fashion is I identified the best sectors, the best industry groups, grabbed the stocks that are in them, and created a hot list that contains 81 stocks. All right, so now I can then, whether I want to do it in the hot list, which is where we're going to do it, or I could have done it down here, I have this drop down. Let me show you what the drop down does in the hot list, because it does the same in any window. The hot down is a bunch of pre-planned filters. So we've got 81, I want only stocks above $5. We now have, I guess it's going to wait till I say OK, and I only want stocks above 500,000 shares. I hit OK, we're down to 50. So I could go through and look at every one. Apple sold off this week. Twilio had some great news in the market. Netflix, earnings king. Meta, like this one a lot, don't you? I mean, Meta looks really good here. We do have the relative strength here at 89. And we could go through Spotify, Charter, so on and so forth. Or I can make my life easier and recognize that there are a few signals I like. One of the signals I like is 2 momentum days in a row. That's one of my dots. And I'll explain all tomorrow if you come to my live training session. I can just click on that one and hit OK, and we have one, VTR. And I like VTR. Why? First of all, I want uptrends with pullbacks. Big uptrend and a pullback and a reversal. I like that. Okay. And I'll go back to the daily. I drew a trend line across the tops. And what do I have? I have either about to or a breakout above my trend line. Boy, I like that signal a lot. You can look down here and you can see those 2 momentum dots to the upside, which I liked. It's about to break above the 50 or broke above the 50, which I like. And this would be one stock that I'd be adding. So this is taking a top-down approach, building a watch list, and then scanning. Now I have other scans that I can do. I can take that off, bring back the, let's see, it's just the hot list. I can go into the impulse. And this is where I've got the same 5 and 500,000, 1,676 stocks. and I could go here and drop down the same scan for the 2-day momentum. This is really my favorite scan in this market. And it's going to show me, start with 1676, and, all right, let's make sure they're all there. Yep, it did it. And these were the stocks it showed me. And one that I liked a lot here, and this will be the second stock that I'm going to show you that I like, is EDR, Endeavor Group Holdings. Why do I like it? It's a beautiful uptrend, and a pullback to the 50 and a breakout. And, I looked at this one and I thought, it's a buy above here. And it's breaking that out. So those are two of the stocks I'll be looking at Monday. If you want to know more, you want to see more of the stocks that I'm looking at, more of my built-in scans on this tool, as well as see the great power of other projects within Wealth Charts, TradeStation, or if you just want to understand what top-down trading is all about, I hope to see you tomorrow. This is it for the weekend video. There won't be a long one, no slideshow, and I'm going to try over the next couple of weeks to evolve into just going in the charts and getting done in 30 minutes or less. Have an awesome, awesome, awesome weekend. I hope to see you at my seminar tomorrow.